XRP holders, pay close attention right now. While gold and silver just sold off hard, XRP moved up, and the analysts saying this cycle won't top in 2026 might be the most important thing you hear this year. What's good, everyone? John OG here. I dig deep into the real data behind crypto and global markets. No noise, no hype, just straight research. Let's break this down properly. Before we get into it, everything in this video is for educational and informational purposes only. Nothing here is financial advice. Crypto is highly volatile. Please do your own research and speak with a qualified professional before making any investment decisions. Let me start with what happened on March 2nd, 2026, because it is genuinely significant and most people are going to miss the bigger story behind it. Gold surged past $5,394 per ounce, marking its highest level in a month. That's not a small move. That is the global safe haven trade in full motion. Investors were nervous, geopolitical tension was spiking, and the instinct was to run toward gold, to run toward anything that felt stable and real and outside the reach of any single government. And yet, at almost exactly the same time, gold and silver both reversed sharply. Silver fell nearly 7%. Gold gave back a significant portion of its gains, and the capital that came out of those assets rotated, and one of the places it rotated into was crypto, and specifically, XRP was trading around $1.41 as Bitcoin surged past $69,000 briefly, adding roughly $100 billion in market cap across the entire crypto market in under an hour. Now, why does that matter for XRP holders specifically? Because what we are watching is the beginning of a narrative shift that many analysts predicted, but that very few retail investors are actually prepared for. The old story was simple. Gold goes up when fear goes up. Crypto goes up when risk appetite is high. Those two things were supposed to be on opposite ends of the spectrum, but what we saw on March 2 is that story breaking down. Capital is beginning to treat certain digital assets not purely as risk plays, but as part of a broader rotation strategy. And XRP, because of its growing institutional base, its compliance profile, and its deep integration with banking infrastructure, sits in a unique position during these rotations. Let me explain what I mean by that. When geopolitical tension rises, traditional investors buy gold. That is the playbook they have used for decades. But institutional capital that is already positioned inside XRP-based infrastructure, inside XRPL tokenized assets, inside RLUSD, inside the ecosystem that Societe Generale and Deutsche Bank and Aviva investors have built, that capital does not just flee the moment a headline turns negative. It is anchored in utility. It is there because the infrastructure is working, not because the price is moving. And that distinction is critical when we are talking about how XRP behaves in an environment like the one we are living in right now. Now let's address the World War III conversation because it is unavoidable. As of March 2026, the crypto social media landscape is discussing the prospect of a global conflict at the highest level since June 2022, according to blockchain analytics firm Sentiment. The US and Israel carried out strikes against Iran. Ali Khamenei, Iran's supreme leader, was killed in the operation. Iran retaliated against several nations in the region, including the UAE, Bahrain, Qatar, and Saudi Arabia. France, Germany, and the United Kingdom have signaled they may take defensive action. President Trump warned the conflict could continue for up to 4 weeks, and across financial markets, the question being asked is a serious one. What does an escalating Middle East conflict, or worst case, a wider global war, do to XRP and the broader crypto market? Here's my honest assessment, and I want to be nuanced about this because the easy answer is also the wrong answer. The easy answer is panic. The honest answer is more complex and actually more instructive. In the immediate short term, escalating geopolitical conflict causes risk-off behavior. Equities sell off. Leveraged crypto positions get liquidated. Even Bitcoin and XRP drop because investors need liquidity, and they are pulling it from wherever they can. We saw that in the first wave of the Iran conflict news. Bitcoin dropped sharply. XRP fell. That is normal. That is predictable. But what happened next is what most people are not talking about. Bitcoin surged back past $68,000 within hours of Trump's confirmation of the operation. XRP joined the move. The crypto market added roughly $100 billion in value within a single session, because the market had already priced in the geopolitical fear before the official confirmation. When the news broke formally, some of that fear evaporated, and the short squeeze did the rest. $80 million in short positions were liquidated within 45 minutes of Bitcoin's move higher. That is not organic buying alone. That is the mechanics of a market that had positioned too heavily on the downside getting forced out. The AI analysis I have been tracking is also relevant here. 4 major AI chatbots, ChatGPT, Gemini, Grok, and Perplexity, were all asked what assets would suffer most in a true World War III scenario. They all agreed on 2 things. Small-cap altcoins with thin liquidity and no fundamental use case would be most vulnerable, potentially losing up to 90% of their value. And meme coins would be effectively wiped out because they are entirely sentiment-driven, with no underlying utility. But here is what they said about Bitcoin and XRP. Both were considered the most resilient assets in the crypto sector. Bitcoin, because of its decentralization and digital gold narrative gaining strength in a monetary instability environment. XRP, because its utility as a settlement and liquidity infrastructure layer means demand for it is tied to the actual functioning of global finance, not to retail speculation. That is a critical distinction. XRP is not here because people feel good. XRP is here because banks and institutions are using the ledger to settle value, to issue stablecoins, to tokenize real-world assets. Société Générale is not going to abandon their MiCA-compliant euro stablecoin on XRPL because there is tension in the Middle East. Deutsche Bank is not going to walk away from their Ripple integration because of a conflict that the markets have already partially priced in. The infrastructure stays. The use case stays. And in fact, in an environment where traditional cross-border payment rails are stressed by geopolitical disruption, the argument for a fast, neutral, settlement-focused network like XRPL becomes stronger, not weaker. Now let me spend a serious amount of time on the part of this video that I think is going to matter most to people who are watching right now and wondering why the price has not gone where they expected. I'm talking about the cycle thesis. Specifically, why multiple credible analysts are now saying XRP will not top in 2026, and why that might actually be great news for long-term holders. Here is the context. The standard crypto cycle model looks like this. Bitcoin halves, Bitcoin rips. Altcoins follow roughly 12 to 18 months later. Everything peaks, everything corrects. Simple 4-year loop. Under that model, with Bitcoin halving in April 2024, the cycle top should have come in late 2025 or early 2026. And XRP did hit its prior all-time high again briefly at around $3.66. So the old model would say the top is in or near. But there are strong arguments for why this cycle is structurally different from any previous cycle. And understanding those arguments is what separates the patient, serious investor from the person who either sold too early or is now in a panic wondering what went wrong. The first reason is regulatory clarity. XRP did not have a clean regulatory environment until the SEC settlement finalized in August 2025. That means years of institutional capital that was legally blocked from taking XRP exposure is only now beginning to flow. Spot XRP ETFs only launched in late 2025. Canary Capital's ETF saw $58 million on day one. Total spot XRP ETF assets under management crossed $1.3 billion in the first month, with a 55-day streak of net positive inflows. That is not a peak cycle dynamic. That is early institutional adoption. The scale of capital that can move through regulated ETF structures into XRP is orders of magnitude larger than anything that drove the previous cycles. The second reason is the Clarity Act. The Ripple CEO has stated there is roughly a 90% probability the Clarity Act passes by end of April 2026. This legislation would provide a comprehensive legal framework for digital assets in the United States. If that passes, every financial institution that has been sitting on the sidelines waiting for legal certainty gains a clear green light. The capital unlock that would follow would not be a retail pump. It would be institutional positioning at a scale the retail market has never experienced in XRP's history. The third reason is the on-chain supply situation. Exchange reserves are at a 7-year low. Institutions are accumulating directly through OTC markets. A 2,490% surge in OTC spot inflows was recorded in a single 8-hour window in November 2025. 42 new wallets holding over 1 million XRP each appeared in January 2026 alone. That is not distribution, that is accumulation. And that accumulation is happening at the same time that ETFs are locking supply. Institutional custody is removing tokens from circulation, and RLUSD stablecoin demand is growing at 1,800% year on year. What does a market do when supply compresses? Institutional demand accelerates, and regulatory clarity arrives simultaneously. It does not top, it re-rates. The argument from several cycle analysts right now, and these are people looking at the epoch cycle, the 4-year halving model, the on-chain data, is that the true top for XRP this cycle is more likely to come in late 2026 to early 2027, not in Q1 2026. The 5 red months XRP just went through from the end of 2025 into early 2026, while painful, are consistent with an asset that has not yet seen its major institutional demand unlock. The fundamentals are building during the consolidation, not breaking. And this matters for how you think about the current price. XRP at around $1.40, 60% below its all-time high, while the XRPL hosts $2.3 billion in tokenized real-world assets and grows faster than Solana, Polygon, and Avalanche in the 30-day real-world asset growth charts. That is a price-to-fundamental disconnect that historically resolves upward, not downward. My personal view, and I want to be transparent that this is my read of the data, not financial advice, is that the people most at risk right now are not long-term XRP holders. They are the people who never positioned, who are waiting for certainty before they move, and who will find that by the time the story is obvious to everyone, the best entry points will have passed. I have seen this dynamic in every previous cycle. The conviction phase always looks uncertain from the inside. It only looks obvious in hindsight. Now, what I am watching as the key signals over the next 60 to 90 days. First, whether the Clarity Act moves forward on schedule. Second, how XRP ETF inflows trend as the geopolitical situation develops. Third, whether the XRPL tokenized asset base continues its current growth trajectory. And fourth, how the macro picture, specifically Federal Reserve policy after the March 18th meeting, interacts with risk asset positioning. A dovish Fed stance could be a significant tailwind for the next leg. The gold and silver rotation we saw on March 2nd is one data point, but it is a telling one. Capital is not sitting still. It is moving dynamically across asset classes as the macro landscape evolves. XRP is increasingly in the conversation, not just as a speculative asset, but as a functional piece of global financial infrastructure. And when capital rotates in this environment, infrastructure plays with institutional backing tend to be where serious money lands. That is everything I've got for you today. If this gave you a clearer picture of what is actually happening with XRP right now, hit that like button. It genuinely helps the channel. Subscribe and hit the notification bell so you are here for the next deep dive. Drop your questions in the comments below. I read every single one of them. I'm John OG, XRP holders. Stay patient, stay grounded, and I will see you in the next one.